the difference between supply demand and support resistance. Hello guys, my name is Darius and welcome to my YouTube channel over here, where I would like to show you in this video on some examples what the difference between supply demand and support resistance really is, because a lot of traders out there are doing this wrong. So they're using supply demand as support resistance, but the thing is that there is a huge difference between those two levels, those two patterns actually. And yeah, I would like to start with this video immediately, but before I'm going to do this, just make a check over here on my TradingView channel, where I post also a lot of trading ideas, like example over here the GBP/USD, which went exactly into our direction, or also over here EUR/USD and so on. So yeah, I post mainly supply demand, so you will never see me posting something about support resistance, and this is what I would like to show you in this video. And if you would like to join me trading with me, then check out my inner circle group. The link is in the description down below. We made over 60R in just 3 months. Okay guys, now here I'm going to explain you on the GBP/USD and also on the EUR/USD some real examples on how this really works. And I would like to just make some theory at the beginning, so just for you to keep in mind what the difference really is. Now the thing is, everybody will know what a support resistance is. Okay, for example, this is kind of a market which is approaching at a level, ranging over here, and then suddenly you would like to see the market to go to the downside, or what you also would like to see is that the market will break this resistance, and then all the breakout traders will came into this market waiting for the retest, and then you expect that the market will go to the upside. Now this is support resistance, and this is super common. Everybody knows this, those rules over here. This is super easy, but the thing is, maybe you already found this out, that this really doesn't work. Why do I say this? Well, because of most of the times not that scenario will play out. Most of the times it will be something like this. So look over here, maybe you already noticed it. The market is ranging over here and you decided at this moment to go short. Okay, so let me pick up this instrument over here. Let me pick the color red, and at this point you decided that the market should go to the downside because you are at a strong level of resistance, so you would like to see the market to drop to the downside. And yes, it really drops to the downside and you're currently a little bit in profit. Your stop loss will be over here above that area. So let me map this also in red. This is your stop loss, and what you do expect right now is that the market should continue to go to the downside. Then you will see the market retracing a little bit, and you just think of, okay, that's just the correction, let's add a new position over here to scale in. This is super normal, you can do this is not a problem. Also me, I do the same thing. But the thing is, what will happen over here is that the market then suddenly will move up higher, hitting your stop loss, and then afterwards giving you this huge retracement. Okay, then you just think of, okay, that's a game of probabilities, that's not a problem. Let's switch right now to a long position because we got a clean breakout. Then you're going to switch to longs, put your stop loss over here. Okay, you're currently in the long position. That one over here already cleared your stop loss. Okay, you're out of the market, and then the market will go like this, lower, then giving you the movement that you wanted to see, and then boom, drop, correction, boom, continuation to the downside. And that's it. You will lose on both sides because you have decided to trade support resistance. And this is the truth about support resistance. It is because of those movements that you've seen over here, and this movement over here before the market really dropped to the downside was just a liquidity grab. Okay, this is super important, guys, because the whole market is dominated by liquidity. And what is liquidity? Maybe you already understand it from this example. Liquidity is equal to stop losses. Okay, so the more stop losses are located at a specific area, the more liquidity is located at that price. So the market will always move exactly in that direction where everybody's putting their stop loss. So over here, when you're at resistance, the most stop losses will be below and above, okay? Because some of the traders will like to trade a long position, so they think the market will break out and it will continue to move up higher, or they're going to short it because they expect the market to respect the level of resistance and it will drop to the downside. But in fact, what will happen is not 100% sure, so you never can say what will happen over here, and you should not care about what will happen. You should care about the reaction of this market, and this is not how you should enter this market. So you should never enter at the resistance immediately into short, and also you should not immediately enter long positions when you see the market has broken that level of resistance, because this whole movement over here could be still a fake breakout, and you will see it afterwards on the higher time frames when the candle will close. Okay, so for example, this kind of movement could be then easily something like this. Maybe you already noticed it, something like an bearish pin bar. So let me do it over here with a rectangle. So you will see something like this. Let's color this red and put the wick over here. So you will see something like this, and that will be the result if you would have waited for the market to give you proper price action confirmation. For example, you could have entry after the bearish candle. So this is going to be the result that you see over here. That will be the fake outs on the lower time frames, and on the higher time frame you will see a bearish pin bar, and the market will then go to the downside from here with a high accuracy. Okay, so something like this is then what you will see. Then maybe the next daily candle to happen, it will then just keep dropping. Okay, and you missed it because of you entered at a resistance and you thought about, okay, this market will go up, so it cleared both positions. Okay, so that's support resistance over here. Now I would like to introduce you to supply demand, guys. Supply demand is a little bit different, okay? Because of support resistance is most of the times an historical level, okay? So whenever you will see the market is moving like this, you will map out your levels like that. So you will have here a resistance area, or you will have here a support level, because of the market has touched them several times. Okay, and there are some books telling you the more touches a support resistance has, the more powerful that level is at the end, and that you can really go for long from here or to go for shorts from here. And you should always wait for that break and retest. I mean, that's not wrong, that break and retest, but you will never target high liquidity levels, because whenever the market from here will came to this level, you will never really know if it will go to the downside, and you don't know if it will respect then the next level of support, and you can expect from here the overall bullish continuation, or you can also not predict from here that the market should go up. Okay, maybe it will just fake out. Your take profit level will be exactly at this resistance. It will not be hit it because of the market will not move till the next level of resistance, because the market doesn't really care about resistance. The market always does care about the liquidity. So in this case, if the market would have moved like this, then you know there were a lot of stop losses from people trying to short it. And at the moment, after they got all the stop losses hit, then the market will drop down. And you're just thinking about right now, okay, how should you really enter this market? So it will look something like this, okay? It will look something like this. And you just think of, okay, going short here is wrong, going long here is also wrong. And why is this wrong? Pretty simple, guys. The correct answer is to entry at the supply area. And the supply area would be, in this case, exactly over here. So you will have some confirmation that this is a strong level of supply, and that means exactly after the market has broken through this level of support resistance. So let me map it out. This is resistance, this is, in this case, let's do it, this is support, and this is going to be our supply level. Okay, so just to make it a little bit more clear to you, using that one perfectly. Okay, so let me also write it down. That's a supply zone. So it's a fresh level. Okay, that's super important. Supply areas are always fresh levels where the price of interest is pretty high that the market will potentially reverse from there. So don't get me wrong, a supply demand is not a level where the price needs to reverse. That's absolutely not necessary, but it has a high possibility to do this, okay? And in this case, I view this as a resistance, support resistance, but more as a resistance because of we are looking right now on the last movement, and the last movement should have been from here to bring the price down to the downside, and in this case here to the downside, that's only a support level because the market was only respecting it and it never broke through that level, okay? That's the difference. So support resistance is always a level which was not broken, and the next resistance level would have been here for the retail traders, here above. Okay, now as you can see, the supply area is the answer for your stop losses, because here you have stop losses from people who are here to take shorts, okay? And you also got here below stop losses from people who would like to go long, okay? So you are clearing both sides with this area of supply. So hedge funds are putting their orders exactly over here, and they are doing here some manipulative movements, okay? So they're trying over here, like I explained it here at the very beginning, they're doing stuff like this in order to trap you, in order for them to collect the liquidity. So their job is to collect a ton of liquidity, because if they have the most liquidity, then they can even push the price in that direction that they wanted to see it. And in this case, they wanted to see the price bringing it till that level of supply, and only afterwards they are going to execute their shorts. So in fact, they're going to close their longs. So they entered here longs, pushing the price that much. Here they're entering short, but during this level of resistance, they are doing those fake movements, like I explained it over here, before going then in the other direction. And this kind of scenario, what we can see over here, will not happen often. Of course it will happen, don't get me wrong, because if that will never happen, then why should you even trade support resistance? So every book is telling you to trade support resistance because that's the key strategy out there and stuff like this. I'm here to tell you that support resistance doesn't work. It really doesn't work. Sometimes yes, but for me it really works, support resistance, to be honest. Why? Because I'm using it as an extra confluence that my supply zone has a higher probability to work out, because also supply zones doesn't have a win rate of 100%. Okay, a supply zone is just a liquidity area. That means at such a liquidity area, you can also expect two movements. You can expect from here the market to push to the downside, but at the same time, you can also expect that the market will just push to the upside, okay? So supply zone or demand zone are supposed to bring the price to the upside, and supply zones are here supposed to bring the price to the downside, are basically just levels of liquidity, and you will never know in what kind of direction those areas will really bring the price, okay? Maybe also in the supply zones you will have fake outs. That's also possible, exactly like on support resistance, but supply zones work much better compared to the support resistance, okay? That's super important, guys, to find this out, okay? Then let me just open over here a clean chart for the GBP/USD, and let me find out for you some nice examples to support resistance. Now let's have a look here to the chart in this area over here. Do you see your support resistance levels? Yes, actually this is your resistance. That is your resistance, and this is your support. What do you see over here, guys? You can see clean fake outs here, clean fake out over here, and only here it worked out. But the reason was not because that was a support level anymore. It is because at the same level you had a level of demand. Because from here you have a level of demand. And this was just a fake out, and you can see how the banks are using this liquidity against you. Okay, because retail traders, they would have come here entering the short at that level, and they will enter it over here at this resistance block, and the price will just push to the upside. And let's have a look more into deep over here. What you can see over here is at the moment when the market has approached this level of resistance, you can see that it went in the first place to the downside, okay? And it faked out that the price is respecting it, okay? So here, with this candle, with this 4-hour candle, we came to the support resistance, so like this. We touched that support resistance, we did that movement, then started a strong movement to the downside to illustrate us that this market is shifting currently from a bullish market to a bearish market. And then what is the result? The market will push just through that level, going up higher, and then it will suddenly reverse with a huge bearish candle. And that means the hedge funds, they entered the market at that area, and the financial institutions, and they brought the price all the way to the downside, as you can see. And it went lower, then it came back for a retest, and then it went lower, okay? This is crazy. This is how they used the support resistance to just trap us retail traders, and that's crazy. And this is something you should really be aware of, because otherwise you will be trapped again and again and again and again. And this is also something like a Wyckoff theory, which is telling you about springs and upthrust, and those are springs and upthrust, okay? So what can we see else over here? Let me check out some new examples. For example, during this whole upturn over here, this market was just faking out over and over. You had over here, look at this, support resistance. So you had over here your levels, and as you can see, the market always didn't respect those levels. Look at this here, for example, it did, okay? Sometimes it really does, okay? But it only does it because of it is in a confluence with supply demand, okay? And in this case over here, as you can see, the market went from here to the downside, back up, retest, went up higher. That was successful support resistance in this case. If you would have gone here short, again, you would have been trapped. As you can see, movement to the downside. As always, it will always react to it, and then back to the upside. Retest, boom, continuation to the upside. So on support resistance, there's a high probability if you're going to go long or short, there's a high probability that you will lose one of them, okay? So that you will be exactly from the first one, you will have the right decision is very low. You will always lose at least one of those sides. And what I recommend, if you still are super in profit with support resistance, if the strategy really works for you, this is not a problem. You should stick to that plan if it really works. I'm just telling you over here that it doesn't work for me. For me, it really doesn't work. I just noticed this thing over and over again, so many fake outs, so many fake breakouts, stuff like this, and I'm not profitable with them if I'm entering them, and I don't like to have so many losers over here with a low risk reward, okay? And as you can see, you will always lose some of those positions, and you should of course try it, okay? If your short didn't work out, try it with a long, okay? It's a try and error over here in this forex business, and you need to be at the end of the month or at the end of the year, you should be in profit. Otherwise, your strategy is not good. So here it worked out. But what can you see over here? Again, that was the fake breakout to trap the retail traders going long and trapping also the sellers and so on. Here it was a level of demand. Look at this. Huge liquidity located, spike to the downside, boom. Next level of demand we had over here. As you can see, perfectly diving into that level of demand, and then boom, move to the upside. Okay, so level of demand compared to the support resistance work very good. Okay, in this case over here, again, you had in this phase, you had also a resistance with supply. This is why the market went to the downside. But look over here, if you would have entered at previous level of resistance, now turn support with a long opportunity, then again, you would have been trapped with the movement to the downside, but if you would have been a supply demand trader, you got a nice entry around that area, and you will rock GBP/USD to the upside. And in fact, in the inner circle, for example, we took exactly over here a nice sniper entry, and we rock it all the way to the upside. That was one of the best trades that we did with a plus of 8R, okay? So for all those who don't know what risk reward is, 8R is how many you risk. So I risk 1R to make 8R in this case. and I risk 3% on each positions, that means I was risking 3% on that trade to make, if it would have been a winner, 24%. So 24% with only one trade. That was crazy. Okay guys, so that was just a quick example of risk reward. But as you can see, supply demand works super good, support resistance doesn't. Then back to the upside, supply to the downside. Support in this case worked out, but maybe you would have mapped out the support resistance in this case otherwise, because if you had here the new structure and maybe you would have mapped it out like this, that would have been good otherwise, but you wouldn't had this level then, okay, because the market only respected this level in this case, then went all the way to the upside. Then here is your next level of resistance. Market is breaking through this level. Market is breaking through this level, and then all the way to the downside. Then you were looking to buy. Oh no, just moving lower. In this case, you had a level of demand. Market is pushing it all the way to the upside. Okay, so sometimes those levels work out because they are in confluence with supply demand. Now let's have a look, for example, on this phase over here. You had this resistance. The market broke above, and what happened? You were looking to buy it, okay? After you failed to go short, the market, you were looking to buy it. What happened? The market gave you another movement to the downside, and afterwards it went all the way to the upside. And here we also got a nice long opportunity. Why? Because there was a level of demand in this case, and from here the market went all the way to the upside. Okay, that's crazy. This is how it really works at the end of the day. You should really go to supply demand, work them out. Okay, also let me check it out over here. I told you this example with the resistance. Yes, right, look here, that was your level of supply. That worked out. As you can see, market dived exactly into the liquidity. Boom, huge movement to the downside. This is how you can do with supply demand. Now, don't get me wrong, with supply demand, you cannot make right now 1,000 pips with 100% accuracy. That's not that strategy. But it has a high probability that those levels will return to bring the price, in this case, to the downside. And as you can see, after we're hitting that level again, the price was just pushing to the upside, okay? And look at this. Look to the left. In this case, you could have drawn the supply demand otherwise. Why? Because we just went up higher, and that was then your new level of demand. Okay, from here the market went to the downside. You had a supply, then we broke above, supply turns demand, back to the level of demand. Boom, look at this huge movement. And in this case, you really could have made over 1,000 pips with this level of demand. Let me check it out. Yeah, thousands pips with this level of demand. Simply. That's super simply. This is how it works. Now we'd like to show you something on the Euro USD. Let's do a little bit of a back test. Going to this one over here. Let me check it out how we can profit on this level. Now, what I like to do is I like to have everything in confluence. So I'm looking also on the monthly, weekly, and daily time frame for potential setups. So I would like to see everything perfect in my alignment. And in this case, I combine market structure with impulse correction and with supply demand. And what I can see on the Euro USD is that we started a nice impulse, and during this slowdown over here, that's a contraction phase, it's a distribution phase, I would like to see the market going to the downside. Now, what retail traders would have done was here to go short at this level of resistance, and the market again went up higher, giving you some movements to the downside to show you, okay, the market will drop down, but in fact, it was just pushing to the upside, collecting all the liquidity that was located at that area over here, okay? And then you can expect the market to move lower after collecting this whole liquidity that was provided around that area. Now, what I was looking is to go for a test at least till the 0.382 or 0.5. Of course, 0.618 would have been also probability in this case, okay? That will be the target for most retail traders. Why? Because you got previous level of resistance, now turn support, or maybe even lower, something like this over here. That will be also a target for retail traders. me personally, I was only looking for this area, okay, only from 0.32 till the 0.618, and that's it. I don't want to see the market going lower, okay? What I'm looking currently is that we're going to look for a nice short setup because of we broke that level of resistance, as you can see over here. So I like to use those levels which we broke through as in liquidity area. So that means right now hedge funds and financial institutions, they were able to close their position. What we need to see right now is that the market will give us a movement to the downside, followed of course afterwards of a correction, because impulse correction, afterwards you expect the next impulse. And that's going to be our setup for the Euro USD. Switching right now to the daily time frame, of course, we need to wait for some further confirmations. Now here, while looking how the market will respond to this level of support, okay, we need of course to see a break of it. You got another level of support. In this case, for the Euro USD, you will see a lot of levels of support, resistance, and as you can see, the market will then go to the upside. In this case, you also will see a nice trend line break. Look at this. You will map out over here strong level of supply, and this is where I got my entry. Okay, this is where I'm looking to go for a nice short, exactly from this level over here. Let's map it out over here, getting here into a nice short setup. Price, yeah, you can vary your stop loss depending on your price action confirmation, looking for the price to go to the downside from here. As you can see, respecting the level of support, of course it will do so. And then from the weekly perspective, we would like to see the drop at least till the 0.32. Then you can put your entry till that level, but what I like to see in this case is at least till 0.5, as you can see, also pretty nice with the structure. In this case at the 0.5, you will also map out over here a previous level of supply, and in this case a level of previous supply will turn as demand. So I'm looking to close my position exactly at a level of demand. Okay, so let's map it out over here on the daily time frame. Putting take profit around that area. So let's see, it only needs sometimes to only just tap into that level. You can also see here that's a level of demand also on the daily time frame on the Euro USD. That's also clean, fresh level. So let's see if this trade will play out. Movement to the downside, as you can see, pretty nice. Boom. And that was it. That was your close. You should have closed your trade. As you can see, it only likes to tap into the level sometimes, okay? It is not absolutely necessary to go very deep into the level. And as you can see, it were respecting it, and boom. That's it. That was your nice trade setup for the Euro USD based on supply demand. But let's map out some more probabilities. Let's see if we're going to go for the next setup. What I can see over here is a new clean area of supply. From here, what I do expect is again a movement to the downside. We're going to test then this level of support over here, which is at the same level than new demand. Let's see how it will develop. Yeah, move to the downside. I'm looking to short it from there. Here is going to be definitely my target. That's the next level of demand. Here I got my baseline for my supply area. Let's see what will happen. Okay, price is moving to the downside. Back to the upside. Look at this. And I really like something like this. This is really the best entry currently to look at this one over here. That one was, for example, just a liquidity grab up front that area, so it didn't really went up higher like I wanted to see, because that is the exact level of supply. And sometimes for a nice setup, in this case you had some more confluences like here an M formation. That means you wanted to see the market going down, and that is right now currently my setup, looking from here to go short. Tight stop loss over here just above that wick that we had, and put your support, put your take profit to the support area. Let's see how it will play out. Okay, got an M formation again, price moving to the downside, and take profit level hit. That's completely nice. A risk reward of 1 to 4.64. That's pretty nice. And what we like to see right now is from this order block, we could go right now potentially for a nice long setup. Let's see if it will work out. And next target is again this area of supply, but because of we tested that level multiple times, we can put in a higher target in this case. Let's see how it will work out. hitting here the play button, boom, 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 going up higher. Nice confirmations. In this case, you got an impulse followed by correction, another impulse. What you can expect right now is that the market should continue even higher, so we can target right now this level of liquidity. However, what you can see right now is that this level is not a level of supply anymore. It will become a resistance. That means we got a high chance that that this price will be broken, okay? And in this case, you can see sellers went in, trapping. Getting this movement is definitely expected, as we can see it from the theory that I explained it to you. So it will trap at the resistance. You will see a trap of the sellers, providing you the fake move to the downside, and afterwards the market will go up higher to trap again all the sellers. And in this case, you could have also seen something like this, but because we got that impulse correction, we do expect the next impulse to the upside. Let's see, and boom, price hit our target. That's a risk reward of 1 to 9, what you can eventually do in this case with supply demand. So that's the power of supply demand, guys. This is what I trade. This is how I use it in inner circle, of course, with a lot of other techniques, because you need to have proper price action confirmation in order to have big risk rewards. In this case, you've done bigger swings. This is how you can easy achieve with, look at this, 40 pips stop loss. What I do is always a stop loss of 20, between 10 and 20 pips stop loss, and I try to achieve about 80 to 100 or 200 pips, depending on how long I would like to hold that position. Okay, this is how I do my trading setups, but everybody does it a little bit different. This is how I'm doing it here in this video. I just wanted to explain you a little bit how you can use support resistance to take an advantage over your competitors, okay? Because everybody knows support resistance, but not everybody knows supply demand. And in this case over here, for example, we can view it again. You had over here level of support, resistance. What you can see is that the level where the market was broke through was that level of resistance, supportive, of course, okay? You can see market went to the downside, breaking that level. But if you are a supply demand trader, then you know here is your level of demand, and here you're looking for a potential longing opportunity. As you can see, that would have been a nice scalp, but you know, in this case, you are in a bearish environment. So going over here for 1,000 pips, or like we had it over here for a few hundred pips, that's not possible, because in this case, the environment was again bullish. Here you are in a bearish environment, so you cannot target that strong levels, okay? That much pips in this case. But that's basically it. This is how you will always see that the price is always moving to supply demand and not to support resistance. Support resistance will be only used to grab the liquidity so that they can push the price in the direction that they wanted to have it. Okay, guys, I hope that this video helped you. And remember, if you would like to join me, just check out over here my inner circle over here. The link is in the description. And yeah, would like to work with you together, to trade with you together, guys. And see you then in the next video. Bye bye, guys.